Hey, this is Mayor Valensky with Driving Markets. Sorry for the late production today. Just had a lot of things I had to sort out, but let's have a quick recap. So markets yesterday shot up. The S&P, NASDAQ was up 3%. The Dow was up 2%. Significant rises across the board on Amazon and also Meta, Facebook, across the board. Google all shot up on the back of retail sales. The consumer confidence in the States, or the confidence that the retailer has, boosted all of those retail outlets. Macy's, for example, came out with a very positive retail report in the States, and that is added to investors' appetite to buy into stocks and shares and push the markets a lot higher. So anyone who's got a retail outlet, they can take confidence and get encouragement on the back of those numbers. I know it's in the US, but anything in the US always feeds through to the rest of the global economies. So those UK retailers and European retailers, they can take confidence on the back of that the retail sales in the States, retailers as consumers are buying, and the retailers as a result went up. And let's look at a couple of other things. Some viewers have asked my opinion. What do they think about precious metals? So the precious metals, let's just look at them a bit more detail. So generally the precious metals, the palladium, the nickel now, the platinum, the gold and the silver are on the way down. Now, I did get it wrong short term. I did believe gold was going to go to about $2,300 and it's not. It's sailed all the way back to 1820, 1840, and it's probably going to go all the way down to around about the 1700 level. Platinum, palladium and nickel are also on the way down. Even though there's a war in Russia and Ukraine, they're still a lot more expensive than they were pre-war, but they are floating down simply because there is now more relaxed view in the marketplace that the investors are looking to general higher risk investments short term. So short term, you can see gold and silver, platinum, palladium go down. They're on a cycle down. Look at the graph. Technically, there's further more to drop. So probably stay short on those precious metals. Now you have to remember that metals are valued in dollars. All commodities are valued in US dollars. But I've stated over again and again that the countries producing those commodities are not necessarily US dollar bearing. In other words, Ukraine, Russia, Canada, Indonesia, Malaysia, they don't not denominated in US dollars, so they've got to buy the US dollar. So the more that the US dollar goes up, the higher by definition the commodity goes up in price, because it's measured in US dollars. So just keep an eye on that. So I would suspect that short term you may see a little bit of weakness in US dollar, and as a result of that, that will help commodity prices to fall and also could lower or reduce inflation slightly, but that's only for very short term. Overall, the price of commodities is going to go up long term, and inflation is going to go up long term. So whatever I say short term, I mean for a week or 2 or 3 weeks. I'm not talking about 3 years, okay? So over the next 12 to 18 months, you will see long-term palladium, platinum, nickel, gold, silver start rising as the dollar rises and as the demand for those particular groups of commodities rises with it. Also look at soft grains. Soft grains are also going to go up in value, and there's a shortage of soft grains around the world, as you can see by the cost of food in your local store, whether it's Safeways, Tesco's, Walmart's, Walgreens, whatever the case may be. The price of food is going up, and that's also based on US dollars. Soft grains are based on US dollars. Now, interesting, oil's gone up over 4% in the last week. It's now running at $114 a barrel, which is going to put further underlying pressure on inflation. As oil goes up in price, then obviously the cost of production and the cost of moving goods goes up in price, because everything is based on oil. And the price of a gallon now in California, I think, is running at about $8 a gallon. So the US consumer, the US traveler, driver is not happy at all. But the price of oil is going to continue rising, and that's also going to have an underlying pressure on inflation and going to keep on pushing it up. So keep an eye on that. Now, other interesting one is Bitcoin. So the cryptos, and everyone just wants to get involved in cryptos, and no one looks at underlying fundamental shares. One of my colleagues sent me a graph on Crocs. Crocs is the Canadian shoe producer. It's got a PE of about 4.8, which is nothing, and it's dropped by 70%. I have a conversation with him on a regular basis, and Crocs looks like an absolute buy at these levels. Also, investors are not looking at the Bitcoin, or the crypto investors are not looking at the Amazons, and they're not looking at the Apples, where there is a solid growth there long term, even though short term it is all the way down. But the crypto traders, they want to have the open casino environment, and Bitcoin cannot seem to pass the $30,000 level. It just can't hold on to it, and that is a bad sign. It looks like it's going to go from here all the way down in the near term to 20,000, and in the short term it's going to go down to around about 8,000 on Bitcoin. That's it for now. I'm sorry for the late delivery. I've done it. Hope you have a good weekend. Enjoy the sunshine if you have any. I'll speak to you later. Mayor Walensky Driving Markets. You can catch me on Instagram, Twitter, YouTube, and any other media platform. Have a good day.